Aloha everyone, Joshua Hayes at BigWaveTrading.com. You might want to pause this video right here and go grab your favorite beverage because it's going to be a little longer than normal and a little different than usual. Normally, we always review all of the intraday stops that triggered intraday, and I post them up for you to review. And normally we go over all of the end of day 50% and 100% sell signals. However, obviously, following Friday's session, there were so many intraday stops and so many end of day sell signals that if I went through those, this video would literally take 1 hour. So instead, check the new positions page for the 50% and 100% sell signals. If you are long any of those stocks on those lists, you need to move that amount of your remaining share stops to 1 cent below whatever Friday's low day was, depending on if it was a 50% or 100% sell signal. Now, that being said, at the same time, there are 0 new long positions. There is 1 speculative long trade that I'm actually going to try to make on Monday, but I'm putting so little capital into it. It's definitely a trade that should just be educational purposes only. And I do not recommend anyone even attempt to take the trade whenever you do see it this weekend. But why this video is going to be so different is because we're just going to go over the overall market. Friday was a very interesting session. First off, when you look at the New York Stock Exchange, you can see that it pulled back 0.25%. And you'll also notice volume was lower than the session before. The S&P 500, you can see that it pulled back pretty harsh, but volume was lower than the session before. However, then it starts to get more interesting. Dow Jones Industrial Average, technical distribution day, confirmed by its ETF, the DIA. Then we go look at the NASDAQ and we can see, clear distribution day, more above average volume selling. All the tall red bars ever since this April move, red, above average volume selling. We go look at the NASDAQ 100, obviously the same situation. QQQ looks pretty bad. And then we get to the real culprit, the IWM. Already drew this basically ascending, bearish, almost wedging triangle pattern formation. You can see that it attempted 1, 2, 3 breakouts of that crudely drawn downtrend line, failed, broke through the uptrend line, attempted to retake the highs, almost making a 1, 2, 3 quadruple top, and is now breaking down below the recent lows in the 50-day moving average on above average volume, with my internal indicators confirming. Not good, hence why I had so many intraday stops triggered today. A lot of profit stops, but at the same time, a lot of small loss sell stops. Very, very much mixed bag. Now, whenever you go look at the Russell 2000, you can see its RSI has moved back below the 50 line. You can see it's in a clear downtrend since the recent highs. You can see each attempt at a new high came with a lower RSI, so everything is in clear confirmation that this index is weak. Even worse, the MACD is completely rolling over here. The histogram is increasing. The spread between the moving average convergence divergence lines is increasing. So momentum is starting to pick up on the downside. So it's pretty bad out there overall. Very, very negative. Now, there's just so many talking points I want to go over. I hope I can remember everything. This is starting to happen as soon as we enter the 2 most bearish months for stock market returns seasonally. February is a bad month, and you can see seasonally it lined up. This weird uptrend came in May. July is supposed to be your bullish month. Really didn't do a whole lot. March is your bullish month. That kind of lined up, but it came from such a weird pullback that there wasn't much there. Well, now we're heading into August and September, 2 seasonally very poor months for stock market returns. And now we have price confirming with those oscillators that I just showed you all lined up. So this is not the best time to try to play hero and look to be buying stocks while we head into this two poor seasonally historical months. If we do get our sell-off through August and September, that will then lead us to a potential turn of positive seasonality into the end of the year with a market rally that we can work with. Hopefully we get the nice looking chart patterns and individual stock setups that I love to see to get long. Hopefully we get some fear in the market so I can have more conviction and confidence behind my trades. We shall see. Right now I can tell you my individual stocks look bad. A lot of my long holdings are starting to look extremely shaky, with some looking terrible, hence all the sell signals following today's session. And overall, there's just a lot of bad looking charts out there. And at the same time, if you think that, if you think everything's looking bad, maybe we bottomed. I hope for my long positions, if we have, it wouldn't be good to rally now, because if we rally into the positive seasonality months of October to December, then once again, we don't line up. But right now, sentiment is pretty frothy on the bull side overall. It's not extreme. It's not insanely bullish, but by frothy, I mean the crowd just isn't bearish at all. The put-call ratio is only at 0.92. The VIX is only at 13. Remember, back in February, it hit 50. The Investors Intelligence Survey, the AAII survey, have bulls well ahead of the bears. The Fear Greed at CNN Money Index is at 67. That's greed. The NAAIM Exposure Index is at 85% long. These are not capitulation numbers. So to think that we have a bottom here as we head into the most seasonally bearish months, for the market would be silly. At the same time, going into all of this, we didn't know if we were just going to keep on zooming higher. So every time I got new long signals, I kept taking them. Hell, they were all working until the past week to 2 weeks. Now all those long signals are pretty much failing left and right. That is now my signal, along with the market, sentiment, seasonality, to pump the brakes, halt long operations unless I really, really, really like to love the technical setup. If I do not love the technical setup, if it's not in some of my top scans, Cancelim quality, Perfect Speculator scan quality by the book The Perfect Speculator by Brad Kodishwar, or a recent IPO, or my price volume BOP surge scan, I'm not going to look to push any kind of capital at risk here. It's all about protection right now. And in fact, this has been a kind of weird start to this move. Like I said, I hope we move back higher. Not really, but it would be nice for my long positions. But at the same time, if we can sell off, and if my long positions can hold up, that's a best case scenario, the uptrend would be better. But the setup is so bad and seasonality is so much negative that the one thing that did not happen, though, is that I didn't get hedge signals leading into this potential turn, and even following Friday's session, I didn't get any hedge signals in the usual ETF names that I normally get my hedge signals in. But now that volatility is starting to pick up, now that seasonality is in favor, I can now go back to day trading the S&P 500 SPDR, SPY, options, obviously puts. Now, I will probably be looking to actually put on a swing SPY put trade come Monday, in the money, longer term expiration, on a play that August and September is going to be weak, risking the recent July highs and ultimately that January high on those SPY put swing trades. But more importantly, now since I've already raised over 10% cash. So now with the excess capital, I'll be looking to go back to day trading those SPY put options with the right setups using the 10-20 exponential moving average and the certain chart patterns, certain failures at support, at resistance levels, breakdowns below support levels, and trend lines. When the SPY put options move, they can move. On multiple days here, they moved 100 to 500% intraday, and on multiple days here, 100 to 400% there. So when the market gets volatile, these put positions can move. So I'll be looking to be working on that if the market decides it wants to keep on selling off, which I don't see why it wouldn't. Like I said, I don't care what the market does. I have a game plan for everything. The market keeps going higher, great. My stop should hold and my stock should keep hitting new highs. I'm going to be reviewing 6 of them this weekend. ULH, FORD, SUPV, HLIT, SRCLP, and UVE that had new closing highs on Friday on my various social media pages. So it's not all dire out there, and I still had about right around 30% of my portfolio was actually higher on the day, but still it was terrible breadth overall. But even that being said, if you go look at the 100% sell signals, there really isn't as many as I really thought I was going to have by the end of the day. Now, if we keep selling off next week, you're going to see a ton of stocks get purged out of my portfolio. I don't hold on to losing positions. They sell off below the 50-day moving average once with gains, I'm out half. Sells off below the 50-day moving average twice on heavier volume, if I even have big gains, I'm all out. There's just no questions asked. Anytime a stock that I'm long above the 5,200 that's up over 100%, once it breaks the 200-day moving average for the first time and closes below it, that's always the final profit stop. So no matter what, if these stocks start moving down, I'll be getting out. And for all the recent long positions that I've taken that have not been working higher immediately, you can be 100% sure if they were down today, well, hell, I've raised the stop to today's low a day. It might be all of it, 75%, 50, 25% of it. If you're not sure what you should do, always err on the side of caution and safety and raise it up 100%. If you want to know what you should do, send me an email. Leave a comment on the new positions page. Go into the chat room, ask me. I'll tell you exactly where my stops are and exactly how many shares are at each of those stops. So with all this being said, the video actually is not lasting as long as I thought. I don't know that the market's dead yet. Now, I've been warning you over and over and over and over and over that I don't like this most recent short-term uptrend in July. July is supposed to be one of the most bullish months for stock market returns when it works, and it can be fun. Because the Russell 2000 lagged, the New York Stock Exchange advanced decline line lagged, and my returns weren't that good. Some individuals think that the market returns are linear and that you should always be able to just, oh, your chart should always work. You buy a nice stock chart pattern, boom, 20% no matter what the market does. No, that's not the case. That's why I've been warning everyone this entire month. And plus, basically I've been warning everyone for the past 2 months that I do not like this current uptrend in the overall market because we keep selling off on heavy distribution and V-shaping on lower volume. Heavy distribution, V-shaping on lower volume. Heavy distribution, V-shaping on no volume. Rinse, repeat. Rinse, repeat. And this most recent V-shape has been even more wedgy with even worse volume. I cannot embrace a market like that, but I will never fight price, especially knowing the amount of share buybacks that are going out there, including the increases in the dividends that each company is offering, because you can guarantee that's never going to the workers' wages, and you can guarantee that's never going to hiring new people for jobs. It's only going to enrich those that already own the assets. So I understand the floor in this market, but without a market rallying to new highs on heavier volume, I could deal with the heavy volume down, but without the heavy volume up, I know what comes from V-shaped rallies. I've studied this market. I've done my back testing in the Dow Jones Industrial Average to 1880. I've done my back testing in the S&P 500 at 1957, and I've done my back testing in the NASDAQ to 1971. I know what I am working with. There is no market environment that you can find quite like this. It's very weird. But as long as stocks are hitting new highs in my top scans, giving me long signals, I'll take them. But have you guys noticed I haven't been putting 5%, 10%, 20% of my capital into these stocks? It's always been like 1%, and I just recently got a 2% signal and it's immediately not worked. So I've been investing accordingly, which has left me with a ton of positions, but I already operate this Interactive Brokers account like a hedge fund, so it's not a big deal to me. But I've been warning everyone ad nauseum that unless you love the pattern after doing your own research, you should be, if you do take those big, like 5 to 20% size positions that I recommend people take per trade, then you need to have tight stops and understand the environment you're in, because I sure as the hell understand the environment I'm in. I know when the money's in the corner just waiting to be picked up. I know when I need to go all in on full margin. I know when I need to swing for the fences. I also know when I need to take my signals, because whenever I don't take all my signals, torque happens. Just to let you know, torque was flagged this day by me. I decided not to get long torque because I didn't like all the distribution here and all the red bop in the chart. Well, that's what happens when you don't take it. It gapped up over 100%. So the point is, a signal is a signal is a signal, but I treat it according to the market that I'm given. I know that this bull market started in 2009. I know I'm 9 years into it. I know the Fed is hiking rates. I know that we're V-shaping on no volume. So I invest accordingly, and I'm quick to run to the exits when it doesn't work out. But I've been warning everyone to go slow, to pay attention to the market. I've been telling everyone to only take quote, quote, safe trades, and I tell you which trade is quote, quote, safe. I'm not doing that for my own health. I care about you guys, and I want you guys to be successful, and I know this methodology can make you successful, and I know many of you can supercharge it and produce returns that are 10 to even 100 times better than my returns, especially if you know how to work options. So with all of that being said, as we head into the new week, I'm open-minded to anything. The market can rally or it can sell off. Seasonally, August and September is ugly. I wish I would have pulled up the seasonality charts while I was making this video, but I didn't. But I posted I posted a video lesson this week with it on there, and I'll post the video lesson on Monday reminding everybody once we actually make it into August that August and September is bad. So I'm erring on the side of bears. Cash is also positioned. If none of these hedges trigger, that's fine. But on Monday, like I said, I'm looking to swing a SPY put option. If we gap down huge, I'll have to try to work an entry, and it'll probably be a limited position. If we gap up, I'll try a larger position, like I said, working with the January and July highs in the SPY. If this high goes in the SPY, well, guess what? Back to the drawing board, cut my losses on the SPY put positions, and thumbs up, because that means all my other long positions are working. So the losses in the SPY puts will be small, and then all my long positions will be saved. But if this market does crater, my profit stops will get me out with profits on the ones that are good. Small losses will be mitigated, but because the SPY puts produce such huge returns once that volatility increases, especially at the level that the SPY is currently at, it can be a very nice payday and offset the losses that will come as a normal drawdown from the account highs, since I am basically 85% long right now heading into Monday. All right. I will see everyone in the chat room Monday morning. I will post updates on those 6 stocks, ULH, Ford, SUPV, HLIT, SRCLP, and UVE with updated trailing stops. Aloha, everyone.